Costing. MCQs test. Chapter 9. Marginal costing. Question 1. Contribution is equal to option A. Sales minus variable cost. Option B. Fixed cost plus profit. Option C. Sales into PV ratio. Option D. All of the above. Question 2. 1 minus variable cost ratio is equal to option A. PV ratio. Option B. BEP. Option C. MOS. Option D. Indifference point. Question 3. Which of the following will not improve the PV ratio? Option A. Increasing selling price. Option B. Decreasing variable cost per unit. Option C. Decreasing fixed cost. Option D. Improving sales mix. Question 4. In BEP, option A. Total income is equal to total cost. Option B. Contribution is equal to fixed cost. Option C. Profit is equal to 0. Option D. All of the above. Question 5. In BEP, sales into PV ratio is equal to option A. Contribution. Option B. Fixed cost. Option C. Profit. Option D. Variable cost. Question 6. 1 minus MOS percentage is equal to option A. Variable cost ratio. Option B. PV ratio. Option C. BEP percentage. Option D. Fixed cost. Question 7. In MOS, contribution is equal to option A. Fixed cost. Option B. Profit. Option C. 0. Option D. Variable cost. Question 8. In MOS, fixed cost is equal to option A. 0. Option B. Profit. Option C. Contribution. Option D. Variable cost. Question 9. Cost BEP represent option A. Shutdown point. Option B. Indifference point. Option C. BEP. Option D. MOS. Question 10. Level of sales which leads to both the options profit or equal is known as option A. Shutdown point. Option B. Indifference point. Option C. BEP. Option D. MOS. Question 11. If level of sales below indifference point, the selection criteria is option A. Option with lower fixed cost. Option B. Option with lower variable cost per unit. Option C. Any one of the option we can select. Option D. None of the above. Question 12. Level of sales below in which it is not justifiable to pursue production is known as option A. Indifference point. Option B. Shutdown point. Option C. BEP. Option D. MOS. Question 13. In shutdown point, company should recover at least option A. Total fixed cost. Option B. Avoidable fixed cost. Option C. Unavoidable fixed cost. Option D. Both fixed and variable cost. Question 14. Angle of incident represent option A. Angle formed at the point of intersection of total cost and sales line. Option B. The angle represent the rate at which profits are being earned. Option C. If the angle is large, then the profit will also be more. Option D. All of the above. Question 15. Impact on PV ratio if increase in sales quantity is option A. Increase. Option B. Decrease. Option C. No change. Option D. None of the above. Question 16. Impact on PV ratio if 10% increase in selling price and 10% increase in variable cost per unit is option A, increase, option B, decrease, option C, no change, option D, none of the above. Question 17. Impact on PV ratio if 10% increase in variable cost and 10% decrease in fixed cost. Option A, increase. Option B, decrease. Option C, no change. Option D, none of the above. Question 18. If there is 10% increase in selling price, variable cost per unit will be option A, increase. Option B, decrease. Option C, no change. Option D, none of the above. Question 19. If PV ratio is 40% of sales, then what about the remaining 60% of sales? Option A, profit. Option B, fixed cost. Option C, variable cost. Option D, margin of safety. Question 20. The PV ratio of a product is 0.6 and profit is rupees 9,000. The margin of safety is option A, rupees 5,400. Option B, rupees 15,000. Option C, rupees 22,500. Option D, rupees 3,600.